Back in 2016, on the Tuesday evening of 8th November, our Honorable Prime Minister Shri Narendra Modi ji had made an announcement that took the entire country by a storm. He had announced the demonetization of the 500 and 1000 rupee notes. Overnight, these notes had become worthless as they were no more acceptable as legal tender. What followed was an extremely chaotic process of exchanging these old notes with the new notes of 500 and the 2000 rupee denomination, which was newly introduced back then. Now, last week, the Finance Ministry's announcement of the discontinuation of these newly introduced 2000 rupee notes sent shivers down everyone's spine and brought back memories of the chaos which ensued in November and December 2016. In today's episode of The Third Empire, we will talk about this decision of the government to discontinue the 2000 rupee notes and try to understand whether this is another leg of the demonetization process or not. Now, while we do that, we will also talk about the factors that led to Moody's concluding that India will remain the fastest growing G20 economy for a few years now. You're watching Informed Investor, The Third Empire, an initiative by Research and Ranking. Let's begin. Now, in 2016, we remember that the Moody-led government had announced the withdrawal of the high denomination banknotes, specifically the 500 and 1000 rupee notes, which accounted for approximately 86% of the currency in circulation back at that time. Now, the objective of demonetization was to curb corruption, black money, undeclared wealth, counterfeit currency, and the funding of illegal activities such as terrorism. Now, the sudden withdrawal of the high-value banknotes, however, caused significant disruption to the Indian economy and the daily life of the citizens. Now, the decision led to long queues at banks and ATMs as people rushed to exchange their old banknotes for the new ones. Now, the cash storage severely impacted various sectors, including agriculture, small businesses, and the informal economy, which predominantly relies on the cash transactions. Now, many people faced difficulties in accessing their own money for the daily expenses. Now, the opinions on the effectiveness of demonetization have been divided. While some argue that it helped uncover hidden wealth and discouraged cash transactions, others contend that the negative economic impact outweighed the benefits. Now, the move did lead to an increase in digital transactions and also led to the formalization of the economy to some extent. But the overall impact on curbing corruption and black money remains a topic of debate. Now, post the announcement of the RBI scrapping the 2000 rupee notes, social media is abuzz with speculations about the nature of this move, with many comparing it with 2016's mega demonetization drive. Is this true? Well, not exactly, and let's understand why. Why is the scrapping of the 2000 rupee notes not like the 2016 demonetization situation? Now, 2000 rupee notes still continue to remain legal tender. Unlike the sudden invalidation of the 500 and 1000 rupee notes during demonetization, where the value was lost overnight, the Reserve Bank of India and the government have not declared the 2000 rupee notes invalid at this point in time. The RBI has confirmed that these notes will continue to be legal tender and can be used for transactions. Therefore, the value of the 2000 rupee notes remains intact, unlike the situation where the 500 and 1000 rupee notes did not carry any value post the announcement. Now, the withdrawal of the 2000 rupee notes was not unexpected, as the RBI had been gradually reducing their volume over the years since demonetization. Now, the value of the 2000 rupee notes in circulation is 3.62 lakh crore Indian rupees, which is about 10.8% of the total currency in circulation currently. Now, this means that the proportion of the 2000 rupee notes in circulation is relatively smaller compared to the total currency in circulation. This means that most people logically possess only small quantities of these 2000 rupee notes, and as a result, the panic that was observed during the demonetization period is unlikely to occur this time. Having said that, this withdrawal of 2000 rupee notes will not create any big disruption, as the notes of the smaller denominations are available in sufficient quantity. Now, the RBI has provided ample time and facilities for individuals to deposit or exchange their 2000 rupee notes at bank branches or authorized RBI centers. Now, the deadline for this process is, however, set to 30th September. Now, the customers can exchange 2000 rupee notes amounting to 20,000 rupee at a time starting from Tuesday. Additionally, there are no restrictions on depositing the 2000 rupee notes in customer accounts. The RBI has also permitted bank agents to exchange 2000 rupee notes up to a limit of rupees 4,000 per day for the account holders as well. Now, in conclusion, the RBI's decision to phase out the 2000 rupee notes aligns with the objective of the clean note policy. Although there may be temporary effects on the economy, the availability of the smaller denomination and the increasing adoption of the digital transactions are expected to mitigate any disruptions caused by the reduction in the cash circulation. Now let's talk about the impact of the withdrawal of the 2000 rupee notes on the Indian economy. Now, according to economists, the withdrawal of the 2000 rupee notes could raise bank deposits by as much as 2 lakh crores, while durable liquidity could increase by about 1 lakh crores depending on the behavior of the depositors. Now, these deposits will have multi-fold benefits, which include increased liquidity. Now, depositing high-value notes into banks increases the liquidity within the banking system. Liquidity refers to the availability of cash or assets which can be easily converted into cash. When individuals deposit high-value notes, the banks have more cash reserves, which enables them to meet the withdrawal demands of their customers. Second is the enhanced lending capacity. Increased liquidity within the banking system allows banks to expand their lending capacity. Banks primarily lend money to individuals and business, which stimulates economic activity. With more cash reserves, banks can offer loans to borrowers for various purposes such as business or expansion, investments, or even personal expenses. Third is the monetary policy impact. Now, the deposits of the high-value notes can have an impact on the monetary policy of a country. Central banks, which are responsible for formulating and implementing monetary policy, monitor the money supply within the economy. Now, when high-value notes are deposited into the banks, the central bank may observe changes in its money supply affecting its decision-making process regarding the interest rates and the other monetary policy tools. Fourth is the improved profitability. Now, increased bank deposits can enhance the profitability of the banks. Banks earn interest income from lending out deposited funds at higher interest rates than they pay to the depositors. Now, as the deposit base expands, banks have a larger pool of funds to generate income through loans, investments, and other financial activities. Now, this can contribute to their financial strength and stability. This move of discontinuing the 2000 rupee notes collectively could turn out to be a big positive in the short term for both the banks as well as the NBFCs, as it will ease their deposit costs and likely impact their net interest margins positively. Additionally, there may be cases where some citizens may choose to not deposit the notes with the intent of evading taxes and end up buying precious metals like gold and silver, or use it for high-end consumer durables, discretionary spending, or even end up buying real estate. While there are many benefits, small business and cash-oriented sectors such as agriculture and construction and real estate may face convenience in the near term. Now, the effect of the withdrawal of the 2000 rupee notes on the digital payments ecosystem. Digital payments were in their infancy when the demonetization was announced in November 2016. There were approximately 710 million digital transactions in October of that year. Now, the promotion of a less cash economy through online transactions was one of the stated objectives of the demonetization effort. Now, digital transactions reached over 1.1 crore in volumes within 6 months of demonetization, and they have been increasing ever since. Digital payments, especially via India's flagship UPI system, have grown from 1.78 crore transactions worth about 7,000 crores in FY17 to nearly 8.3 crore transactions worth about 127 lakh crores in FY23. e-commerce has been playing a huge role in accelerating the push towards UPI payments. According to the 2023 Global Payments Report, cash transactions valued is expected to fall 34% by 2026, while UPI transaction value is expected to rise by 88% by 2026 again. While cash is still king in India, it may soon lose its crown. According to UK-based data analytics firm Global Data, the volume of cash in transactions declined from 90% in 2017 to about 59% in 2021. Now, there is no link between the withdrawal of 2000 rupee notes and the rising online payments, but it'll be safe to assume that the ease of transactions on UPI and other digital payment platforms nullifies the need to use the 2000 rupee notes collectively. In short, the note's weakness as a medium of exchange became its biggest undoing. Now, to conclude, the RBI's decision to discontinue the 2000 rupee notes is driven by a clear goal to tackle hoarding, reduce undisclosed wealth, and increase transparency in the financial system. The extensive research has shown that these high denomination notes have negative effects on the economy in the long run. They make it easier to accumulate and hide unreported wealth, which hinders the development of a regulated economy and also hinders the process of financial inclusion. Discontinuing the 2000 rupee notes could speed up the shift towards cashless and digital transactions, encouraging more people to use digital financial services. Now, the government wants to reduce the reliance on cash and promote efficiency, transparency, and inclusivity. Without high denomination cash, individuals would explore alternative digital payment methods, and this move may also help reduce counterfeit currency usage and improve transaction monitoring, leading to a more formalized economy. So the withdrawal of the 2000 rupee notes is part of the broader strategy to enhance India's financial system, fight corruption, promote formalization, and encourage the adoption of digital financial services. These measures reflect India's commitment to innovation, inclusivity, and ethical financial practices, ultimately leading to a more advanced and a resilient economy. India to remain the fastest growing G20 economy for the next few years. Now, India, a land of diversity, culture, and opportunity, and now it is set to take the center stage as the fastest growing economy in the G20 over the next few years. Now, this forecast comes from Moody's Investors Service, which is a renowned financial institution known for its analysis and predictions. While G20 is an intergovernmental forum comprising of nations which includes 19 countries and the European Union. Now, it works to address major issues related to the global economy such as international financial stability, climate change mitigation, and sustainable development. Now, according to Moody's findings, the driving force behind India's projected economic growth lies in its manufacturing and infrastructure sectors. Now, these sectors are expected to provide a significant impetus to the country's development. The Indian government has demonstrated its commitment to fostering economic growth through substantial investments. Now, in the union budget announced in February 2023, a staggering $120 billion was allocated for various national infrastructure projects. Notably, a significant portion of this investment, approximately $30 billion each, has been allocated to the development of railways and the national highways. Now, these crucial transportation networks will enhance connectivity and facilitate the movement of people, goods, and services across the country. Furthermore, the government's focus on housing and large-scale infrastructure spending is expected to generate a surge in demand for cement and steel. This will not only stimulate the construction sector but also create employment opportunities for countless workers. In addition to traditional infrastructure, the Indian government has also shown its commitment to sustainable development. Their net zero commitment aims to reduce carbon emissions and promote renewable energy sources. This visionary approach is set to propel the renewable energy sector forward, providing a boost to both the economy and the environment. Now, as India gears up to become the fastest growing economy in G20, there are both promises and challenges on the horizon. Moody's Investor Service highlights the potential roadblocks that could hinder the pace of investment in manufacturing and infrastructure, slow policy reforms, and implementation. Moody specifically points out India's higher bureaucracy and its potential impact on the foreign direct investment. While competing with developing economies like Indonesia and Vietnam, India needs to ensure its attractiveness as an investment destination remains strong. However, the Indian government is not complacent. Recognizing the significance of addressing these concerns, steps have been taken to improve the ease of doing business in the country. In fact, India's remarkable progress in the World Bank's ease of doing business ranking is worth noting. From 77th in 2018, India climbed to the 63rd rank among 119 countries in the latest report. Now, it places India amongst the top 10 improvers in the ranks once again. Now, this impressive leap can be attributed to improvements in critical areas such as starting a business, dealing with construction permits, trading across borders, resolving insolvency, paying taxes, and getting electricity. However, the journey towards an ideal business environment is ongoing. While India has made significant strides, there is still work to be done. Achieving a top 10 or top 20 position requires continued reforms and effective policy implementation. India's determination to improve its ease of doing business is a testament to its commitment to fostering a favorable environment for investment. With sustained reforms and unwavering focus, India aims to attract foreign investments that will fuel its growth and solidify its position as the fastest growing economy in the G20. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you and stay invested.
Did you like watching this video? Then download our app, Informed Investor, to watch more such informative and interesting videos.